What's up everybody, this is CA Wealth Workshop. Welcome back to our channel. Today we're diving deep into the world of investing with 5 simple rules from the legend himself, Warren Buffett. These aren't your get-rich-quick schemes. We're talking about building long-term wealth, the kind that sets you up for life. Whether you're pulling in 6 figures, running your own business, or just obsessed with the world of finance, these principles are your secret weapon to crushing it in the market. We're talking real-world results, people. And who better to break it down than an experienced chartered accountant who lives and breathes this stuff? We're taking complex research and turning it into actionable strategies you can use right now. Let's get it! Alright, rule number 1, understand the business. This is Buffett 101, guys. You wouldn't buy a house without knowing its condition, right? Foundation solid, roof leak free. You wouldn't just look at the address and say, sold. The same goes for investing. Before throwing your hard-earned cash at a company, you gotta understand what they actually do. What's their business model? How do they make money? Are they a cash-guzzling machine or a lean, mean, profit-making machine? Do your research. Read their annual reports, understand their industry, and get a feel for their competitive landscape. Remember, you're not just buying a stock, you're buying a piece of a business. Think of it like this. You see your favorite coffee shop every day. You know they're always packed, people love their coffee, and they're expanding to new locations. That's understanding the business. You're not just buying a cup of coffee, you're seeing the potential for growth and profit. And look, I know what you're thinking. Reading annual reports? That's about as exciting as watching paint dry. But trust me, this is how you separate the winners from the losers. It's about making informed decisions, not emotional ones. Rule number 2 is a classic. Invest in what you know. Buffett's a big believer in sticking to your circle of competence. Now, this doesn't mean you have to be a rocket scientist to invest in SpaceX. It's about understanding industries and businesses that resonate with you. Let's say you're a whiz at spotting fashion trends. You're always ahead of the curve, rocking the latest styles before they hit the mainstream. That's valuable knowledge. Use it. Look into fashion companies, analyze their designs, and see if their strategies align with your insights. Take someone who lives and breathes tech here in the UK. They're glued to their phone, always using the latest apps, and they just get the tech world. Investing in companies like Deliveroo, Wise, or even a global player like Tesla might make sense for them. They understand the space, they see the potential, and they can make informed decisions. On the flip side, if someone's trying to explain the ins and outs of cryptocurrency and you're just nodding along, pretending to understand, maybe that's not your circle of competence. And that's okay. Stick to what you know and crush it in those areas. Remember, every industry has its language, its trends, and its key players. By focusing on what you understand, you're giving yourself a huge advantage in the market. Alright, let's talk about rule number 3. Think long-term. This isn't about getting rich quick, it's about building lasting wealth. Buffett's a marathon runner, not a sprinter, and that's how you gotta approach investing. Think about a company like L'Oreal, the beauty giant. They've been around for over a century, consistently growing and paying dividends. Or ASML Holding, a Dutch company dominating the semiconductor equipment market. They've been on a tear for years. These aren't overnight successes, these are companies built on strong foundations, adapting to change, and delivering value over decades. Investing is like planting a tree. You don't see the growth immediately, you nurture it, give it time, and eventually, it bears fruit. The stock market has its ups and downs, but by focusing on the long game, you ride out the storms and reap the rewards of compound growth. Remember, time is your greatest asset in investing. The earlier you start, the more time your money has to grow. Don't get caught up in the short-term noise. Focus on the bigger picture, and let your investments work their magic over time. about managing risk, and the margin of safety is one of your most powerful tools for doing just that. Alright, let's wrap up with rule number 5. The power of compounding. This is where things get really exciting. Einstein called it the eighth wonder of the world, and for good reason. Think of it like a snowball rolling downhill. It starts small, but as it rolls, it picks up more snow, getting bigger and bigger. That's compounding in action. Let's say you invest £1,000 today and it earns a modest 7% return per year. After 10 years, you'll have almost doubled your money to nearly £2,000. But here's where it gets crazy. After 20 years, you'll have almost £4,000. And after 30 years, you'll have over £8,000. That's the magic of compound growth. The key takeaway? Start early and be consistent. Even small investments made consistently over time can grow into significant wealth thanks to the power of compounding. That's a wrap. We just broke down 5 of Warren Buffett's most powerful investing principles, and trust me, these can change the game for you. Remember, building wealth is a marathon, not a sprint. It's about making smart, informed decisions for the long haul. If you found these tips helpful, and I know you did, hit that subscribe button and turn on notifications. We've got a ton of actionable wealth-building strategies coming your way. And hey, let's keep the conversation going. Drop a comment below with your biggest takeaway or any questions you have about investing. Let's learn and grow together. Now go out there and invest like a pro.